Hello and welcome. Today is Sunday, the 5th day of November 2017. My name is Derek, and let's do a hashtag crypto trading video. First code BSD USD, bet send against the dollar. Everything is against within your own risk, own reward. This is an interesting pattern. I love it. That's why I want to cover it. And we see all these different peaks at this upper end of this coin. Weekly time frame. This congestion area mainly sideways, but a little bit of a rising 18 average. When it broke its big resistance at about 76 cents, it lifted off. Now you notice these sell peaks in here coming back. It's doing the similar sort of thing now. The difference within this congestion phase compared to the current one is the current one is doing so within an upward trend. Easy noticeable uptrend, the 18 average. It's barely even touching the lows for the last three periods. It is piercing above on the 18 average of highs. So this really does look poised to have a break against the US dollar. But it could be extreme when we notice the fact of 1, 2, 3, 4, 5, 6 resistance tests in at around 66 cents. Price action's only at 61 cents or barely below it. It's getting to the point where maybe it might have some sort of price correction back down to 45, retest the middle of this band and this previous mark. But when you see any type of break above these key levels like we did in here, okay, it might be difficult to go from 4/5 of a penny all the way up to 22 cents or go up about 30 times like it's nothing. But 30 times on 70 cents, $20, but heck, even if it went to $5 or $6, and that's very much realistic in a situation like this. I find this very much of an interesting chart to say the least. We can see ever since the start of October, it has done a very good job in holding and staying above 50 cents. I want to see it really hold and stay above 60 cents, but no, not really. It's holding and staying above 40 cents, so it's done better at 50. Why say 40? Because even though this is the top level of the range, the previous resistance areas were about 40 cents. It held and stayed above it here, but then it fell down shortly. And here it held and stayed above 40 cents for a good period of time. Now it's holding, staying above 50, which is this key level of resistance. It does seem poised that this would be ready for a breakout. And we noticed when March happened, this thing went haywire. If we put this on against Bitcoin, okay, it went from 600 satoshi up to 11,000. Okay, whatever, normal trading. But if that thing goes haywire, you could expect that this thing is just going to go really, really big. So I thought I'd bring this into tuition, just let people know that this is something I thought was pretty cool. Let's move on to the next code. And it's Funfair. I don't need much into this. This is when it started, but I have to get rid of it so I can only see it. And there we have it. Downside Fibonacci, it would be the following. Whenever you have a downtrend and a move higher, which is what happened here, a move from 400 to 1200, and it ultimately fails, because from the 1200 point, it's stabilized in the middle for a while, develops a range between 550 and about 500, but it ultimately gave in, resisted the 500 area, back down to the previous support level in here that occurred in the middle of October. Then we have this rally in here that got above the 18 average of highs, but it failed immediately. And when it broke support in here, and we can, I don't want to do that, but when you had this red candle, that was huge warning sign, and you see this one in here. On the October the 19th, when you had a third red candle down day to the previous support, basically the statement is that it's going to go down to its leg lower, which happens to be 200. And we never know if it's going to do it immediately or if it's going to rally up to here first to like say 440 then fall, but it did fall. And then on this point here, it established support at 278, went sideways enough where it corrected through time as it hit the band, and then red candle down, down, down to this point of 200. And that's what the downside Fibonacci calculation is set at. Short term, if there's going to be any further decline, 150 would be where this goes to, because just looking at the last 4 or 5 days, it's almost like a bear flagish type of formation, especially with the red candle down after this. But the number 2 buy is where it's at now at 200. And when you have a situation, at least myself, if you're looking to buy on a downside target, one of the easiest places to sell is near where the major support level was, and that of course is around 400. So therefore, if you're ever buying 50% off, looking to sell for 100% gain, if you're right half the time, and the other half of the time you get small losses or it goes to nothing, but more times than not it goes to small losses, medium losses, you're going to be profiting. And yeah, let's go on to the next one, which is Capricorn CPC, and this one has just been getting destroyed against Bitcoin, down to 45.78. But on the weekly chart, yeah, was early 2016 upwards to about a million satoshi. Now it's at about 4,500. Huge decline. Key support areas. Well, originally back in the day, 16,000 was big. 16,000 was tested and then tested below, but this whole area from like November, for the last year, this whole sideways congestion was a test of this previous area. To revert the trend, here's a situation. Step 1, band flatten out. Step 2, establish resistance. That happened April of this year. Step 3, come back to the band. It did to the 18 average of lows, but it could be the highs, it can be in between, and it can be the lows. It did rally. It broke resistance. Failed move, fast move. So the breakout was a failed move. And then all the other rally attempts since, it comes back to the 18 average of lows May 22nd. Breaks in here, but it immediately fails. Another big one in here. And did it ever fail? When we look at this on the daily chart. This is almost textbook worthy, meaning if you want to just write what typical is. Because here you are in a downtrend and you have a huge surge above the 18 average. And you're always going to expect some sort of pullback after everything. It always has to. There's too much profit and too much savior of losses for people not to. But the 18 average is what I like to use as its correctionary phase. And we can see as the resisting of the lows. And we look at September 28th, roughly in here. This was a sign that the failed move was likely to occur. Down she goes. The downside calculation for this breakout is where it is at now. But furthermore, the downside calculation for the more bigger play, the one that fell down here, so the rally from about 9,000 satoshi up to 34,000 or so, is almost here. As that level is a little bit below 4,000, closer to 3,800. And I would generally think that it's probably going to break below 4,000 and test that level. When we look at the situation, there's a very good chance that it will at least have one of those failed moves that almost every code likes to have to where it came from. First place to where it came from is 9,000. So we're already looking at the first conservative sell spot to be greater than a 100% gain. But we can even see that it could, because then we're talking more long term, it could test some of these previous early areas, like 17,000. So to finish this off now, I want to just show you what this looks like against the US fiat currency, because Bitcoin has been tearing. And it's definitely not bullish against the dollar, but it really isn't in that bad a shape either. Let's bring it up. And in this case, you can just see, oh, well, it was down here to a nickel. It rose all the way up to 3 and change, but I mean, there wasn't much time at it. There was a lot of congestion area around 75 cents. Oh, and then a huge fall to a dime and 15 cents, and now it's up to 34. So when you look at it from different perspectives, if you bought, say, for example, sometime in March when it was like 15 cents, you're better than double. Yet, if you did the same thing against Bitcoin, because Bitcoin has been up so much, if you bought sometime in March like this when it was 12,000 satoshi, well, you're 1/3 off. And one thing even to look at it in perspective, if say you've been holding any type of altcoin for a significant period of time that might be down better than 50%, 60, 70%, against the dollar, well, 50% is only 100% gains. So that's the equivalency of a 35, 36, 3,700 Bitcoin price. Then when you price in the dollar, a lot of them are doing relatively fine. And again, with a lot of these codes, when Bitcoin does decide it wants to have a test of its weekly 18 average, which would bring us to about 40 into the 4,000s, there's a good chance that a lot of these alternate coins will actually be going higher. But for now, of course, that isn't doing such. Thank you for tuning in to this video and have yourself a great day. Bye-bye.